Hello and welcome to Big Deal. I'm Nisha Podar. Now, right at the beginning of a new financial year, it's time to also take stock of the key game changers on the deal street in the year gone by and what's really spills over to this particular fiscal and the M&A investment, IPO, fundraise pipeline building up for this financial year. So my single biggest takeaway from the last fiscal is the large block deals, which gave easy exits to the investors, which is a big confidence booster for the private equity investors. And also it changes the dynamics on the deal street going forward. Now to discuss other key takeaways as well as the outlook for FY25, I've lined up a couple of experts, deal makers joining me on the show are Vivek Gupta of Deloitte and Debasish Purohit of Bank of America. Thank you so much, gentlemen, for joining us right here on the show on CNBC TV18. Now, Debasish, key theme that I mentioned, a lot of private equity players have been talking about that. Apart from that, and this included, what are the key themes and learnings from the last year which are going to have enough impact on the deal street for this year and in the near term?
Sure. Thanks. First of all, thanks, Nisha, for having me over here. I think when we look at the key thematics kind of running over from last year and hopefully continuing to the next decade or more, I think I can probably bracket it into 4 or 5 mega trends, which is kind of sweeping through India Inc.
Yes.
And to start with, I think the first one is we're in the middle of a massive infra capex. I think you've seen the last 10 years investment, particularly in transportation as a space, has outpaced the cumulative previous 65 years investment, right?
Yes.
And the next leg of infra capex spend is going to be driven by energy transition.
Yes.
So I think India is going to build more roads, more infrastructure, more airports, and we're firmly on the path of decarbonization.
Yes.
And which means that I think asset platforms will be created, assets will churn, and more investments will come through.
Right.
The second megatrend that we see is the formalization of the economy, which is moving away from unorganized into organized.
Yes.
And that is great for consumers because it leads to better price discovery, great for manufacturers because it leads to efficiency. There's a second trend. The third trend is the overall digitization and financial inclusion. On one hand, I think consumers are getting easier access to financial services coming to the mainstream, and for the manufacturers, it's better credit decisioning based on data inputs.
Right.
I think the fourth point is the overall premiumization of the market, which is I think there is more disposable income at people's hand, which is on one end is driving the consumption boom, and the second is the largest savings also helping develop the Indian financial markets.
Right.
And the fifth and the most important trend is the pivotal shift India is undergoing from a largely services-led economy into a manufacturing-based. So I think these are multi-decadal trends which are here to stay and will drive the bulk of deal activities.
All right. And a large part of that, traction is already building up from the last few years, and especially in this particular year. We have 2 big events also in this particular year, which is going to also be a key, I think, proponents for a lot of decisions. I'm talking about elections as well as the interest rate cycle turning. Now, Vivek is joining us all the way from London. Vivek, thanks so much for making that special effort in a different time zone. Debasish spoke about a whole host of trends that are really picking up. Private equity has played such a huge role in deal making as well as fueling the growth of many companies. And they are now talking about manufacturing and infrastructure, the 2 capital intensive sectors, for the first time. So that's a big shift that I'm seeing. What about you in terms of key trends? What are the main events for you and the key aspects on which you're going to be going full force on deal making for this year?
2 points. I think Debashish picked up the trends very well. But 2 additional points I'd like to make. One, I think India, from primarily an economy that would service the outside world, is becoming also a very strong domestic consumption play. A lot of multinationals read that domestic consumption play incorrectly in the late 90s. That now in the early 2020s is a reality. So this whole aspect of domestic consumption, I think, also drives pivotal shifts in the way corporates and then private equities tend to invest. So that is one. The second thing is actually geopolitical. If we have the same government come back into power, I think we will see at least a 24 to 36-month period of intense decision making, a very decisive government coming back, if it does, for the third term. And that always has a knock-on effect in terms of deal making, because if there is a certain economic environment, that is bound to lead to more deal making in the economy. Now, this is also what I believe is driving a lot of flows into our Indian capital markets. And by geopolitical trend, I also mean that India stands out in the world today as a country where it's safe to put in capital. And if you see capital market allocations for large global investors, India now appears as a very strong component of that global allocation. So to me, these two trends, in addition to what Debashish very correctly noted.
Right. Investor outlook towards India, and Debashish and Vivek, both of you would agree that they are now exuberant about allocating more towards India. For the next 5 to 10 years, there is a lot of confidence being exuded by these investors. Now, Vivek mentioned about the capital markets. And of course, that has a huge role to play in terms of liquidity, entries, exits. Debashish, what do you think about this particular year and the key events for the IPO market and other fundraising plans from the capital markets?
Yeah, exactly. I think the health of the IPO market, I think it's a derivative of the strength of the secondary markets.
Right.
And today we are sitting in what, the third or the fourth largest market cap anywhere in the world. And we've steadily jumped up from whatever 7th or 8th, whatever 5 to 6 years back.
Yes.
Almost a $5 trillion market cap. The second thing is the liquidity profile of Indian markets has undergone a massive transformation. I think a couple of weeks back, we priced a $2.1 billion block in ITC, the book called Built in 4 Hours Flat, at 1% discount. These are things which you wouldn't have heard of 10 years back. I mean, that's the strength of the market. The third thing is, I think the color of money is shifting. It's getting more domestic rather than predominantly foreign. It's a nice mix between the two. Just to throw some data points, if you look at the last 10 years cumulative net inflow into India, almost $100 billion contributed by domestic institutions and about $80 million contributed by foreign. And out of this 100 for domestic, 70% has come in the last 2 years. I mean, that's the strength of the domestic market. The passive flow is massive. And all this will augur well for the IPO market, because if you look at last year, I think total IPO volumes about $7.4, $7.5 billion. I mean, a far cry from the 18 billion we saw in 2021, with only 2 large IPOs of $500 million plus. I think that is going to undergo a massive transformation. So I think my bet is 24, 25 combined will be the best ever IPO market that we have seen in our lifetime.
24 and 25 combined. All right. So, wow, that's a big statement coming in, Debashish. And next year, we are gearing up for a lot of large IPOs as well. And Vivek, what do you have to say about the IPO market in particular, and especially the unicorns getting ready for that? Is the market going to give them another chance?
This is a cycle in some sense, right? 10 years ago, I appeared on a similar show saying externalization is the way. US markets are really deep. 5 years ago, just when COVID started, 4.5 years ago, there was a lot of talk about direct listing of companies housed in India overseas, just because investors felt that the depth in public markets outside was far more. The point that Debashish drove just now, our domestic market depth now, in terms of both foreign investors and domestic investors in the Indian market, and the ability to find replacement investors for even large block deals. And the overall strength of the secondary market is what gives unicorns the confidence that they must approach the Indian markets rather than the global markets. Indian markets, even from a multiple standpoint, reflect that kind of exuberance. So what we are seeing definitely is that unicorns are wanting to make a play of coming back into India. We've had the government very clearly say that, look, if externalization happened earlier, if unicorns were to internalize now because they want to access Indian capital markets, they must pay whatever tax or toll tax that needs to be paid on for accessing the Indian markets. I think there are interesting possibilities there. So Indian public markets in the context of unicorns certainly look attractive at this point in time. From purely from a listing perspective, while one is seeing a lot of action of Singapore, US, headquartered Indian unicorns wanting to come back, I do think that the IFSC here, which is Prime Minister Modi's pet project, can operate as a very viable via media to access the Indian capital markets potentially through an ADR and take that potentially through an IDR and take that benefit and also give the IFSC markets a fillip. So for the unicorns, I don't think it's just it's a mad rush to internalize or need be a mad rush to internalization just yet. They could access the Indian capital markets in very many different ways, and I think the government will also be happy to facilitate that kind of move from an IFSC public markets perspective. But certainly, I agree with the basic point Debashish made. Secondary markets very strong. Indian markets therefore at multiples that reflect the kind of demand that exists in the Indian public markets, and therefore for pure economic animals, including unicorns, it makes sense to list back in India.
Vivek, you made such an interesting point, and especially about that burning topic of ghar wapsi of the startups. Just a few years back, we were talking about the externalization as well as also global direct listing, which finally didn't actually fructify, and now all of them want to come in. But with one player paying a huge amount of tax already, matters have become difficult for the others. So we have to see how this particular space really develops and will be on top of the agenda and will create a lot of action on the deal street. But Debashish, you've worked on so many of these transactions when it comes to the IPO. We've seen how in the last 5 years, the way the cycles have shifted and the learnings. In terms of valuations, what do you think is the tide turning towards? Are the companies really accepting the kind of valuation the Indian market has the appetite for?
Yeah, I think again, this is, we go through these cycles, right? I think 21 where there's a FOMO,
yes.
you throw anything and everything is captured.
Yes.
22, 23 were struggles, to be honest. It was a biased market. I think in certain pockets, domestic investors held sway on valuation discussions with issuers. Last year, there was a comeback from foreign portfolio investors to make it a balanced play field. I think going into this year and next year, I think it's going to be probably somewhere in between. I think the good news is that we are not seeing the mad level of exuberance that one saw in late 2021 in terms of IPO pricings. I think discussions are very constructive. I think investors want to play some of these stories, both across foreign portfolio investors as well as domestic. I think issuers also pretty sensible in terms of, and I think everyone has understood the playbook that going into public is one part of the story.
Yes.
I think staying true to your fundamental equity story for the subsequent 2 to 4 quarters is even more important. And the good news is that if you look at the average returns from IPO, of IPOs which priced last year, it's in the range of 30%,
Yes.
which was 10% the year before. So these are, I think, some of the successful recipes of making a vibrant IPO market and sustaining it over a period of time.
That's right. Debashish, one big change that has come about is that the new age startup world tried to teach the public market about the matrices on which they should be really valued. But in the end, it's what's the bottom line is the actual line that really prevails in the IPO market, and the other side has understood that, hopefully. And path to profitability is at least articulated by most of the companies. So that's a big change and a shift in mindset that has really taken place, and that is going to really get cemented further in the future IPOs that we are going to see. All right, Debashish as well as Vivek, hold on to your thoughts. We have lots more interesting deal trends to really discuss on Big Deal right after this short break. Welcome back. You're watching Big Deal, and we are discussing the FY25 deal trends. Now, Vivek, going by the trends at the moment, last year we did see some good M&A play and many instances of big competition between conglomerates in certain sectors, old economy sectors. What is the trend that you're picking up when it comes to the large conglomerates, because they have the money power and they could really be most active on the deal street?
I think one of the things that is happening is that larger businesses have access to very wide pools of capital. And therefore, when they're thinking of driving value across the entire economic ecosystem, they're able to pick the sectors. And even if they don't have, let's say, market leadership position in a sector, they're able to very quickly purchase assets which give them that position. So if you see any of our large conglomerates, right, Tata's, Reliance, Birla's, etc., they've all defined what sectors interest them most, and then are willing to lay out the necessary capital in order to get to leadership position in that segment. Some have chosen consumer-oriented businesses, some have chosen manufacturing infrastructure-oriented businesses, and that's a matter of choice that the conglomerate makes in terms of determining how its return on capital employed and how its parameters work best. But in the sector of choice, we are seeing a lot of activity by the conglomerates. In fact, it's very interesting. I mean, on the ground, as we see various deal processes roll out, largely strategic deals are being led by either controlled private equity players or by these large conglomerates who want entry into a particular sector. So I definitely feel that from a large conglomerate standpoint, we will see that the coming couple of years at least are very active in terms of their deal momentum.
Right, so very active, and the animal spirits look like are back, Debasish, because Birla Group is just so active on all fronts, and they are such a large diversified conglomerate. From the Reliance house, well, we are expecting very big things coming up, and a large media deal got done. Tatas have been so active. Their first IPO after decades also came in, and lots of other aspects are also really coming up to become a big player in also the digital space. What do you think is the trend in the conglomerate space, and which are the sectors you think are going to be most active in this?
Yeah, I think before the trend, I think let me just throw some data points. If you look at the last 5 years, I mean, the way the M&A market has kind of transformed, I think there's been a secular bull run in a way in terms of fee pool. And if you look at the shape of the market, sponsor activity has gone up literally 2x in terms of a share of the pie. And what has come down is strategic inbound into India. And the balance is kind of equally split between domestic, strategic, as well as outbound. I think that's generally largely been the trend. And I think the trend going forward is going to be driven by, I think, 2 or 3 things. First is, what are the large conglomerates in India, corporates are thinking in terms of build versus buy. The second thing is, how are sponsors thinking for the next cycle of investments? And the third thing is, to be honest, the nature of the capital market, because 2 years back, where strategic options was on the table for a sponsor asset, today that option has given away to capital market exit, right? So these 3 factors will shape the way I think the M&A market will shape up. And in terms of large conglomerates, I think the way, apart from finding the core strength, which is this corporates kind of targeting, they're also playing along the thematics that I just listed out 15 minutes back, which is the broad India thematics, manufacturing, self-reliance, energy transition, in a way, and providing a platform for a capital flow from outside in, strategic partnership, and also in a way leveraging your existing customer ecosystem, try to monetize in adjacencies or newer areas. So that animal spirit is pretty much back. In terms of health-wise, I don't think we have seen the Indian corporates as strong as any time in our recent memory.
As confident and as positive. Absolutely. And the turn of the capex cycle after over a decade in a big way is one of the very big game-changing moves that has really taken place in the last few months. But one thing that 2 important aspects that I picked up, Debasish, from what you said. One is build versus buy. So a combination of both is really taking place. They're building also and they're buying out also. So it's all about diversification and beefing up portfolio. And the second important thing you also mentioned is going ahead with the block deals instead of strategic deals. Let me throw this question to Vivek. Vivek, do you think that, creative M&A, getting good strategic fit, PE exits by leaving the company at a different level, by beefing it up with the right partner, all that is going to be somewhere dwarfed because of the easy exit that the market is providing?
Look, I think it is an absolute fact that a lot of transactions that would earlier have been, let's say, financial sponsor to financial sponsor sales, private equity to private equity sales, are today very quickly morphing into public market processes simply for the reason that financial sponsors are unwilling to lay out that kind of multiple that the public markets are providing. At the same time, I think fundamentally one needs to understand that yes, we may have an exuberant cycle due to allocations, due to a host of other factors that we have discussed over the last 20 minutes. But fundamentally, I think deal making in India will continue to be driven by basic economics. And that basic economics is India will continue to be an economy which, at least for the next decade or so, will grow super strongly. We are just at that stage of our growth cycle. Politically, if we are stable, we will continue to have all those kinds of impulses which allow for deal making. We've seen that in other countries around the world. The point that Debashish made around infrastructure is also a point where huge capital flows happen at a time that infrastructure is being built. So I think the next decade in that sense is fundamentally a sweet spot. We may have some blips along the way in terms of how public markets are performing versus how private deal making activity is being priced. And today, yes, there is an arbitrage where public market seems to offer a better exit. But I don't necessarily view that as something that will stay fundamentally over the next 10 years. Over the next 5-10 years, I say that deal making will be super strong, and there will be phases where public market holds sway, and there will be phases where strategic deals, private equity control deals, those kind of deals hold sway. Even now, actually, there is a fair bit of the latter happening.
Right. The only thing is that the valuation mismatch between the private and the public market made deal conversions very difficult. And one of the largest global private equities that I met this week was lamenting also about the time that is consumed in consummating a deal in India. And we know of one transaction which took 2 years and then finally got called off. So those are the risks and the challenges also that we are dealing with. Final word to you, Debashish. Few key themes and the sectors in focus, which is keeping you most busy right now?
Yeah, I think themes we went through, right? I think those are 4 or 5 mega trends which will continue to. I think India will be the manufacturing capital of the world. We have 1.4 billion bustling population. Yes. With rising disposable income. I think
so private equity also wants a share in that particular pie.
Absolutely.
But which sectors are you seeing maximum amount of inquiries coming in?
Well, I think the 4 evergreen sectors continue, right, which is financials, consumer services, and healthcare. And beyond that, I would probably put my money on infrastructure, energy transition, and increasingly industrials.
All right, Vivek, your sectors of choice?
I think infrastructure to me will be a sector which over the next 5-7 years will be super strong. And then second, I would say consumption-based themes, whether it's consumption-based themes on the financial services side or it's consumption-based theme on the consumption side as we generally understand it. So to me, these 2 areas will be super critical areas. India providing services to the rest of the world, IT, pharma, etc., all that will continue on its normal path.
Yes.
But if I were to pick 2 blockbuster sectors from a valuation standpoint, I would pick infrastructure and consumption-based themes, and I define consumption more broadly to say both financial services consumption as well as traditionally how we understand consumption.
Vivek, I will add one more consumption. I will add one more consumption to that, which is media, the digital media. That is one consumption play hasn't played out, but big boys are really ready. But I absolutely take both of your points on infrastructure and manufacturing coming back. I hear a lot of infrastructure IPOs are also lining up because the public market is ready to give that play. to it. But one specific aspect that I have seen, which I'll leave the viewers with that thought, is that a lot of promoters now want private equity money to come in, but they don't want to exit their company immediately. They want to hold on, let private equity build that value, and then exit with them later. That is one sense that I'm getting from the promoter community at the moment. So it will be very interesting to see all these really play out as India gets more exuberant and confident about its growth and therefore deal making. Thank you so much, Vivek, as well as Debashish, for joining us. With that, it's a wrap on this edition of Big Deal. Keep it to CNBC TV18.